Good morning, everybody. Here's the trade recap for Wednesday. A lot to cover today. Firstly, I'm going to start with Dixie, then we're going to jump into ES and go through my trades. I took an absolute monster for about 20 plus handle on 3 contracts. Beautiful day. Absolute execution of patience, P-A-Y-tions, right? But if you are new to the channel, welcome guys, welcome. Please do consider smashing the like and subscribe if you are new. It does the channel well good and also helps other traders like yourself view this content, which is what it's all about. Let's jump straight into the action now. And we're going to start with Dixie. I mentioned in the Discord that we had a couple of levels to look out for. The first was on the hourly, and the hourly was this old SIBI. And what do we know about SIBIs? They can act as quote-unquote support and resistance. Now, if we combine that with an old high, that is where we're starting to get the secret sauce. This old high combined with the SIBI, when retested, is when this can be used on quote-unquote support. The old retail theory is very vague, but we know as ICT traders that old highs combined with an imbalance is when you can use an old high as support and resistance. Mentioned in the Discord, be mindful of this level, because if price punches through that one, then we're likely to head lower, but if it respects it, it's likely to stay range bound. Why? Because above it we have a monster mitigation block on the daily, right? We have this high, low, failed swing high broken through. This old order block becomes a mitigation block, and we can therefore take quadrants across that mitigation block, and we're going to expect price to run into these various different levels. Okay, we are, in my view, therefore stuck between this range of the MIT block and this SIBI. Okay, and we also have, if we drop down onto the hourly chart, we also have another SIBI just sat here, right? I'm interested to see if price wants to run up into that SIBI or stay or break through this SIBI here. In my view, if we look at the wider context of where Dixie is currently sitting, we obviously have this market maker reversal model, right? So the market maker model, and we have the sell side of the curve, we have the SMR, smart money reversal, and then we have the buy side of the curve. And we can see the various different stages. I'm not going to break it through today, that's not the purpose of this video, but it's quite clear we're in the distribution phase of the cycle. The question is whether price wants to punch through this and start balancing these imbalances up here, or whether it wants to punch us back down into a range. Why have they taken us up to this point right now? It's because we have huge news on Friday. What do we have on Friday, guys? We have the old non-farm payroll, and that is going to cause the data, that's going to be the catalyst to allow us to punch through a direction. I'm there for believing we are potentially going to see range between now and Friday, stuck between this MIT block and this range here until Friday when a direction is created. That covers Dixie, okay? And Dixie was the reason why, it was a further confluence as to why I believed in the AM session we were likely to see chop, okay? Now, we combine that with other reasons, okay? And those in our Discord Red trading will know, because they're absolute savages, that if we have a huge range day the day before, what are we likely to see in the AM session the next day? Chop suey, right? Chop suey. And we get what? Chop suey. We also had Jerome Powell speaking at 10, so there was absolutely no chance in hell that I was taking a trade in the AM session until after Powell had spoken. That being said, let's have a look at my trade, because I did take a trade in the AM session and it was after Powell spoke. So let's break it down. Why did I take this trade, Jack? Just gave you my real name there. That was dodgy. So let's break it down. As you know, for those of you who like my rejection blocks, and I've done a video on rejection blocks, my favourite, and I'll put a comment card up here, but watch it at the end. I'll also put the video card at the end, so if you want to check it out, check it out. I like them on the 15-minute. Higher time frame, the more powerful they are. We had all this liquidity sat below here, so all of the sell side liquidity sat below these relative equal lows. This candle punched through it. This 15-minute candle is a rejection block. What do we know about rejection blocks? Price is likely to come and back and retest. So what do? I mark equilibrium of that rejection block, and then I jump down onto my lower time frames to see how price wants to interact with it. Let's have a look what happens. price, after Jerome Powell speaks, so Jerome Powell was speaking in this section here, price came down, punched through it a little bit here, but then on the next candle respected it. Where did I jump in? I jumped in here. Where did I run to? Ran back to the midnight open, bang, 5 handles, bread and butter. Thank you very much. AM session, one and done. Move on to the next one. Rinse and repeat. Rinse and repeat. Okay, so that was my trade. That was my trade. What gave me further confidence on top of that 15-minute rejection block? Let's have a look. Let's jump onto my chart, and this is my new weekly opening gap, new day opening gap, and RTH hours chart. What did price run down to? It ran down to that new weekly opening gap. That is giving us an indication that price is bullish and is wanting to hold above. We also had on the next few candles, price running down to Tuesday's regular trading hours open price. Further confidence that price is bullish. This was all helping me frame context that price was looking to move higher. This is why I took this trade. Okay. Now, price moves higher. What is price moving into? Price is moving higher into this displacement leg. Okay. This is the displacement leg from Tuesday's lunch to Tuesday's low. Okay. And we had this range. Equilibrium is considered, just above it is considered a premium. Okay, a very, very weak premium, but a premium nonetheless. And those who know my box theory, we had this box theory on Tuesday, and this is consolidation. What is this consolidation protecting? In my view, it's protecting this market maker sell model in the form of a reclaimed order block. So those who know what is a reclaimed order block, this is a market maker sell model. So this is reaccumulation of the market makers to take the market where? Short. I did a video and breakdown of this session yesterday, so if you haven't seen that yet, go and check it out. There's loads of value in it, but this is indication that they're going to drive the market lower. Now, what they're not going to let price do, if the overall sentiment in the market is bearish, they're not going to allow price to run up to this level in order to take out their positions. It makes no sense that market makers are going to go sell at a loss. We had this price action that took place in lunch, and this was just a fake out before the real move. I'm therefore looking at this price action here as a line in the sand, a first line in the defense of where price is going to run to in order to show continuation lower. Why? Because we're protecting all of these entries up here. So any run into this short-term premium is just allowing, market makers to fill their boots even further, okay, and trapping retail in long. So marking out this SIBI, which is just below this pivot high, okay, and that's what price is going to be drawing up to. My next target, which I called out in Discord, was this mitigation block. Again, for the same reasons, because it was protecting these mass accumulation by the market makers. So we had the high, the low, failed swing high, broken through. Lowest down close candle is the mitigation block. I called out in the Discord in my morning review that this was the range I was working in, between this mitigation block and the new weekly opening gap. Okay? And that's my context as to why. Protecting the shorts by the market makers up here, and then also not wanting to punch through and break through that old new weekly opening gap. Given the fact that Dixie was range bound, and also we were expecting chop suey because of the points I've just mentioned. Now let's go back into the price action, and so we can understand now what price is doing. Price is now running up into that SIBI, which for me is that line in the sand, and this is the protection, okay? And price runs down, okay? Now this moves into the PM session, and this is where I took my monster trade, and I'll show you that trade in a second, but let's break it down. So I took 2 trades. The first trade was on this 2022 model. This is a reversal, okay? We had the sell side, we had the purge, we had price run through with displacement, creating a market structure shift, leaving a fair value gap, bang, there's entry number 1. If you missed that, you could have got back in on this volume imbalance, which was here, okay? This volume imbalance, and you can see how the bodies respect that volume balance really, really well. Wicks do the damage, bodies tell the story. You could have piled in here to go long. What would you have been targeting? Targeting this SIBI, okay? This SIBI up here on the 1 min. Why am I picking that SIBI? Because it's just below this pivot high. That's how I target my SIBIs, okay? Price ran off this, and I took this, some other guys in our Discord took this as well, and we ran this for about 10 handles. Bang. Trade number 1 in the PM session, bagged and tagged, right? Bagged and tagged. But what did it leave open? what did it leave open? It left open these relative equal highs, and it left open a SIBI on the 5 minute. I mean, look at that SIBI just below the swing high. So if it's broken through, this, what's the next one it's going to punch for? This one here, right? Now this is where we can start to look at the two most important rules that you guys need to be familiar with, and I highly suggest you print these and put these on your computer screen, put them in your diary, write them on the back of your hand, do whatever you've got to do, tattoo them on your wrist, I do not care. But price is doing one of two things. It's either going for buy side or sell side liquidity, or it's going to rebalance and imbalance, a fair value gap, volume imbalance, that sort of thing. If we see price has run the sell side and it's not going to run lower, and I'll tell you why it's not going to run lower in a second. What's it running for? An imbalance. And what's the imbalance that we haven't hit yet? This SIBI on the 5 min. Okay, so let's jump into the new weekly opening gap chart. And what did we get? This piece of price action here was when the 2022 model reversal took place. Where did it take place? At that new weekly opening gap. Okay, price ran up, ran into Tuesday's open price low, and you can see how it respected it. So I was mentioning in the Discord, this was an area where I believe price was going to run short, because for a number of reasons. We ran off, this was the target. Let's break down this trade in more detail. So the 2022 model reversal, what were we targeting? The SIBI on the 1 min, okay? What gave us reasons why price might short off this, or might retrace off this? Let's break it down. 1, this SIBI acts as support resistance. So if price breaks through this, this is going to act as support, and we would look to see price rally off of this. If it's showing signs that it can't break through, it's now acting as resistance. Okay, number 1, that is point number 1. Point number 2, let's jump back into the new weekly opening gap. We are respecting Tuesday's RTH hours. I'm not going to go through how I trade RTH hours because I keep that for my Discord. But just know, RTH hour on Tuesday, it was respecting it. Thirdly, if we jump onto the hourly chart, we know that wicks are gaps. And what did we have on the hourly? We had this hourly bearish order block, right? I marked out the wick, and we were looking at the quadrants, because we know wicks work in quadrants, 25%, 50%, 75%. Now, if I hover over this piece of price action here, so this SIBI, look where the cursor is on the 1 hour. So look up here, right? What are we at? 25% of the bearish order block. Wick. Confluence number 3. Okay? But what was it actually doing? It was shaking people out of the wider move. It was shaking people out of the bigger move. Okay? Now, let's break through the trade I took. This is the trade I took, the monster trade I took at the end of the day. 3 contracts for like 20 odd handles. Beastie. First piece of confluence for me was this range, displacement length. I was looking at price to return into the OTE for reasons as to start piling in long. We also had this 2022 model reversal, so I didn't want to see price break below this, but this was a low risk, high reward entry level. What else did we have? We had price running back into what? The new weekly opening gap to do what? Reconsolidate. And what we're targeting? That 5 minute SIBI. It was clear as day. And as we had, as I mentioned previously, already taken the sell side, what is the 2 things that price is doing? It's either taking buy side or sell side, or it's going to rebalance and imbalance. We had already taken sell side, so it was going to go and rebalance and imbalance. That's the only 2 things it can do, guys. I took that trade and I took 3 contracts. I took 2 to come and run into here, which I peeled off, and I left a runner that I want to come and take these relative equal highs and punch into that mid block, which I explained earlier. It never got there, and I ended up taking out my 3rd contract here because I don't like taking trades and holding them overnight. That is going to be it for today, guys. That is going to be it. What I want you to take away from this is a few things. Firstly, is to know that if you have a huge range day the previous day, know that in the AM session the next day you are likely to see chop. Secondly, know your Dixie levels and know where you sit on Dixie. If Dixie is stuck in between 2 strong PD arrays, expect chop. Especially, thirdly, if you have huge news coming at the end of the week. Okay. 4th is to know your new weekly opening gaps and how they are respected, and also your RTH levels. Okay. Now, if you found that useful and you found that helpful, please do consider smashing the like and subscribe. I don't think I showed you guys this. This was the trade I took. So you can see I piled in at 77, out at 92 and 95. That was my trade in the PM session. Found this useful? Please do consider smashing the like and subscribe. And as always, trade safe, trade smart. And until next time, I'll see you on the other side. Take care. Bye.